Thank you for watching this quick video. This week I've been learning a lot about how to explain budgeting and forecasting, and I've realized that I've never really told the story from my own perspective. So I wanted to kind of share how I think about budgeting and forecasting and kind of talk through a silly example to kind of illustrate a point. So here I've got an income statement, and I'll say this is probably a pretty standard income statement for a new or a small company. We've got our revenue, we've got our cost of goods sold, our expenses, our G&A. As we scroll down, maybe some other income, and we're really looking for a bottom line of net income or loss. So when a company starts, or when they're kind of doing, I'll say, first planning, they're all just plug numbers. So we're going to put in a number we think we're going to sell, or we're going to sell this much gross sales. And think about this as a plan. So this is what maybe the plan is for the next month. Here it's a quarter. It could change the period. It could be a month. It could be a quarter. It could be a year, whatever. But they're all plug numbers. And makes sense. I mean, when you're starting out, that's all you really need to do. But then things get a bit more complicated. So then maybe let's go to the next version here. So now we want to start doing it by product. Okay, so it's not just enough to kind of plug a number for gross sales at the top. We want to start saying, okay, well, we want to start doing some units and rates. Okay, that's kind of the first step. So here we're going to start and we're looking at, okay, well, for widget 1, I think I'll sell 400 units, widget 2, 150, and widget 3, 200. And they've got different maybe price points. So you can do the product to get the amount. And then maybe you want to start doing some, put a rate in here for your returns. So depending on how, I want to say 5% of all the stuff that we sell, we kind of have to deal with a return or a breakage or something. And, still Excel works great. This is no problem to do in Excel, whether you're doing a month, a quarter, a year, 5 years. Excel works great for this stuff. And still cost of goods sold, expenses, G&A, other income, no problem. Still plug numbers. Still totally fine in Excel. And what I find is most folks, they don't even start thinking about using a planning tool at this point because Excel is so wonderful. And I do think Excel was wonderful. Let's go to the next step here. So maybe now we start realizing, okay, well, if we sell our 3 different widgets at different rates, and we're estimating a certain amount of revenue, well, you know what, maybe we can start using rates for some of our cost of goods sold. So we put some rates in for freight, direct labor, indirect expenses. It could be any number of different accounts. But something to kind of figure out based off of our sales projection, start forecasting our costs based off of those sales projections. And still, Excel is great. No problem at all. I would say most companies are still not even thinking about using a tool at this point. Let's go to the next step. The next step is to start looking at more detailed expenses. I'll call this driver-based planning. So now we're getting down to, okay, well, how do we forecast advertising? Well, how many new markets are we going to go into? Well, we're going to go into 2 new markets, and for each new market, they're about $400 a piece. So that drives our forward-looking cost for advertising. What about interest expense? Interest expense can get pretty big. Well, that's really related to our line of credit rate. So let's maybe if we think our line of credit is going to be 4%, we can say 4% times, 4% times maybe our beginning inventory, because we're going to have to carry some inventory for a period of time. Okay, and we're still in Excel. We're still doing great. Excel is no problem doing this. Maybe even vehicle expenses. Maybe that's driven by vehicles in service. How many vehicles do we own? Do we own 4 trucks or 10 trucks or 40 trucks? But then we can say we got 4 trucks. We figure they're about $500 a piece for oil changes and tires and what have you. And that kind of gives us a number, a wrong number, in fact. So here in Excel, oops, I didn't put a formula in here. So now I need to fix my formulas because I missed a formula. But now we're starting to see Excel break. And wages. So headcount. Well, how many people do we, if we're going to be selling these many widgets and doing these different things, how many people do we need? Well, maybe we need 5 people. Okay, well, wages are driven by headcount, and headcount depends on how many people, and now we can start getting into rates. And we're starting to see, well, wait a minute, not everyone makes the same amount of money, they're not doing the same kind of work, There's different complexities around these things. We're getting to the point where companies should start thinking about a planning tool for financial planning. Now let's go one step further. Now what about months? Okay, now for our different widgets, well, we want to get a shape of our year. How many are we going to sell? How much are we going to sell in each individual month? It starts breaking down. If we get too many of these, if we're selling too many products, if we've got 1,000 products, Excel has a hard time with that. What if we want to do planning where we say, well, we think we're going to sell a certain number of units in a certain month at a different rate? Well, you can do it. And I've seen fantastic workbooks where it does work, but it gets super complicated. And then even further down, well, how do you want to calculate freight? Maybe freight's different in different months. Maybe it's different for different products. Maybe, there's different complexities around your indirects or how much inventory you want to keep on hand for different products or different warehouses and that kind of thing. So now we're getting to the point where we want to do a driver-based plan. We want to have different units and different rates for different things across different months. And then we want to add on the top of that, well, you know what, maybe I want to push this down. 600,000 is not good enough. I want to make that 800,000. Oh, wait a minute. I type here in Excel, it doesn't really do anything. What I want is I want to put in a full year number and have that push all the way down to updating my rates and assumptions in individual periods across different products to fit my top level numbers now. So while all companies may start just a simple income statement planning looking forward with plug numbers, what you do units and rates, then you add in different percentages for some dependent expenses going forward. Then you start adding in different drivers for different things. Then you start adding different months for different things in complexity. I would say once companies get to this level where they're thinking about how many units and rate they want to do by product, how their expenses are driven by their sales forecast, and how different drivers drive different expenses across different months to their financial plan, they really need to think about having a tool. And I'd love to talk about tools, so feel free to reach out. Thanks for watching.